Hello, friends. Today, we're diving into an amazing book called Trade Mindfully by Dr. Gary Dayton. This book is all about helping traders like us deal with the real challenges we face in the markets, not just strategies and charts, but what goes on inside our minds. Dr. Dayton is both a professional trader and a psychologist, and in this book, he shows us how to handle emotions, stay focused, and trade with clarity, especially when things get intense. The book is divided into three powerful parts. Part 1, the problem, where we understand why traders struggle emotionally and mentally during trades. Part 2, the solution, where we learn how mindfulness and mental flexibility can actually improve our trading performance. Part 3, the process, where he gives a step-by-step way to prepare, execute, and review trades in a smarter and more mindful way. If you're someone who has ever felt fear, doubt, hesitation, or frustration while trading, this book can completely change how you approach the markets. Make sure to like, share, and subscribe to the channel if you want more such deep and practical content that helps you grow not just as a trader, but also as a person. Let's get started. Chapter 1, Traders' Mental Blind Spots. In this chapter, Dr. Gary Dayton explains how traders often operate with cognitive biases that they are completely unaware of. These blind spots aren't due to a lack of intelligence or experience. Instead, they are natural limitations in how the human brain processes information under pressure and uncertainty, two things that define the trading environment. The chapter begins by introducing how our thinking is largely influenced by mental shortcuts called heuristics. These are automatic processes that help us make decisions quickly, but in trading, they often lead to poor choices. One of the main heuristics mentioned is the representativeness heuristic. This is when a trader judges the probability of a trade based on how closely it resembles a past trade without actually analyzing the context or the data properly. For example, just because a price pattern looks like something that worked before, a trader assumes it will work again. But markets are fluid, and conditions change constantly. This blind spot can lead to repetitive losses. Another major cognitive bias discussed is confirmation bias. This occurs when a trader only seeks out information that supports their current belief or trade position, while ignoring or minimizing evidence that contradicts it. The problem here is not just poor judgment, it's how the brain tries to protect the ego. Traders tend to get emotionally attached to their analysis, and instead of staying flexible, they get stuck defending their position. This often leads to holding on to losing trades longer than they should. Dr. Dayton also talks about the recency effect, which is our tendency to give more importance to recent outcomes. If a trader has a string of wins, they may become overconfident. If they've had a few losses, they might hesitate even on high-probability setups. In both cases, the trader's decision is being driven not by current market facts, but by emotional residue from past experiences. The chapter makes it clear that the mind, left unchecked, can sabotage trading performance. Dr. Dayton emphasizes that these mental blind spots are universal. We all have them, and they don't go away with more screen time or education alone. What's needed is awareness. Once you start recognizing these patterns in your own thinking, you can begin to step back from them and make more objective, disciplined decisions. He closes the chapter by making an important point. Technical analysis and trading systems are only part of the equation. True trading skill comes from learning how to manage the mind. Without that, even the best strategies can fail. Chapter 2, Strong Emotions in Trading. Dr. Gary Dayton focuses on the powerful emotions that traders regularly experience and how these emotions can quietly take control of trading decisions. The message is clear. Emotions aren't just a side effect of trading, they are at the center of it. He explains that the emotional roller coaster in trading isn't a sign of weakness or inexperience. Even the most seasoned traders feel the same fear, anxiety, frustration, and even overconfidence. What matters is how we respond to these emotions. The chapter highlights 4 key fears that disrupt traders most. 1, fear of being wrong. This fear shows up when a trader is hesitant to pull the trigger on a trade or constantly second guesses themselves. They become obsessed with being right rather than following the process. The desire to avoid being wrong becomes stronger than the willingness to take a calculated risk. This fear limits growth and often leads to hesitation, missed opportunities, or poor decision-making under pressure. 2. Fear of losing money. Almost every trader has felt this one. The idea of taking a loss, even a small planned one, can trigger deep discomfort. This fear can cause a trader to exit trades too early or avoid valid setups altogether. Ironically, this avoidance often leads to larger losses over time. Dayton points out that fearing loss is normal, but allowing it to dictate your actions causes more damage than the loss itself. 3. Fear of missing out. This fear drives impulsive entries and revenge trades. A trader sees a strong move and feels like they must get in, even if they don't have a clear plan or edge. The fear is not just about missing profits, it's the emotional pain of seeing others win while you sit on the sidelines. This emotional reaction overrides patience and discipline, leading to overtrading and inconsistent results. Number 4, fear of leaving money on the table. This fear appears when a trader exits a position too soon and then watches it continue to run. That feeling of "I could have made more" lingers, and it often leads to trying to force trades or re-enter without a proper setup. It's a form of greed disguised as missed opportunity. Over time, it causes anxiety, overthinking, and a break from the trading plan. Dr. Dayton explains that these fears aren't flaws. They're hardwired into the human brain. They stem from our survival instincts, which evolved to protect us from physical danger, not financial uncertainty. The problem is, the brain reacts to trading losses as if they're life-threatening, activating stress responses that cloud judgment and increase impulsive behavior. The key takeaway from this chapter is that emotions in trading are inevitable. The goal isn't to eliminate them. That's impossible. Instead, traders need to understand and work with them. Suppressing or avoiding strong emotions doesn't make them go away. It just buries them deeper, where they show up later in subtle but damaging ways. By becoming more aware of these emotional patterns, traders can begin to respond with clarity rather than react impulsively. Dr. Dayton sets the stage for mindfulness practices that will be introduced later in the book, tools that help traders stay centered, focused, and emotionally balanced, even in volatile markets. Chapter 3. The Struggle to Control and Eliminate Emotions. Many traders believe that the key to success lies in controlling or eliminating emotions. The moment emotions like fear, anxiety, or frustration show up, traders often try to push them away, suppress them, or pretend they don't exist. But Dr. Gary Dayton opens this chapter by explaining a powerful truth. The more we try to control or avoid emotions, the more influence they actually have over us. This chapter dives deep into the psychological tug-of-war traders experience with their emotional states. Most trading books and educators talk about staying disciplined or emotionless, as if emotions are enemies. But Dayton challenges this mindset. He reveals that trying to fight emotions is like trying to control the ocean. The more force you apply, the more overwhelmed you get. He explains that this struggle comes from a natural human tendency called experiential avoidance. It's our instinct to avoid unpleasant thoughts, feelings, or memories. In trading, this shows up when a trader avoids looking at their P&L after a loss, skips reviewing a bad trade, or hesitates to enter a new trade after a string of losses. It also shows up when traders try to talk themselves out of fear by using positive self-talk, affirmations, or logic, none of which truly work in the heat of the moment. Dayton brings in neuroscience and psychological research to support this. The brain is wired to react to threats, and in modern times, financial loss or uncertainty is processed similarly to physical danger. The amygdala, the brain's threat detector, gets activated when a trade moves against us. And once it's triggered, our rational brain, the prefrontal cortex, takes a back seat. This is why we freeze, overreact, or make irrational choices, even when we know better. One powerful example in the chapter is how loss aversion works. Studies show that losses feel about twice as painful as gains feel pleasurable. That's why traders often cut winners too quickly, to lock in the feeling of gain, and let losers run too far, trying to avoid the emotional pain of a realized loss. This is not a knowledge problem, it's an emotional one. Dayton also emphasizes that trying to suppress emotions doesn't make them go away. In fact, research shows that suppression often intensifies the emotional experience and creates long-term psychological stress. This is why some traders experience burnout, anxiety, or self-doubt even after years of trading, because they've been in a constant, silent battle with their emotions. Traders often use coping mechanisms that don't really help. These include things like deep breathing, telling themselves to stay calm, or using mental tricks to distract from fear. While these might offer temporary relief, they don't build true emotional resilience. Instead of solving the core issue, they delay it, and the emotions resurface again during the next difficult trade. Dr. Dayton explains that the path to emotional mastery isn't about elimination. It's about willingness and acceptance. When traders learn to acknowledge their emotions without being controlled by them, they can trade with clarity. The goal isn't to feel nothing, it's to feel everything and still follow the plan. This leads to one of the key ideas in the book: psychological flexibility. This means being present with your thoughts and emotions as they are, not as you wish them to be, and still taking committed action toward your trading goals. Instead of resisting fear, you notice it. Instead of denying anxiety, you let it be there and shift your focus to what the market is telling you. Over time, this builds a new relationship with emotions, not as enemies, but as signals. Dayton stresses that traders must begin seeing emotional discomfort as part of the process. The market will always be uncertain. Risk can never be removed. But when you stop fighting the emotions that arise from this uncertainty, you free yourself to trade with greater presence, discipline, and long-term success. Chapter 4: The Necessity of Emotions in Trading. Dr. Gary Dayton shifts the conversation from managing emotions to understanding their value. He starts by challenging one of the biggest misconceptions in the trading world: the idea that emotions are obstacles. In reality, Dayton explains, emotions are essential. They aren't something to eliminate. They're tools, if understood correctly. Most traders are taught to be emotionless, to stay detached and purely logical. But this thinking misses a critical point. Emotions evolved to help us survive, to alert us, to guide our behavior. In trading, emotions aren't just noise. They're data. When properly interpreted, they offer insight into what's happening both in the market and within ourselves. Dayton introduces a crucial distinction between emotions that dominate us and emotions that inform us. The problem isn't that emotions exist, it's that we often become entangled with them. Fear becomes panic. Frustration becomes revenge trading. But it doesn't have to be this way. He brings in psychological research showing that emotions are deeply tied to our decision-making systems. People with brain injuries that impair emotional processing lose the ability to make good decisions, even when their intelligence and logic are fully intact. This means emotion and reason work together, not against each other. Emotions provide the motivation and urgency to act. Logic helps us evaluate those actions. Without both, we're not fully functional. In trading, for example, a feeling of discomfort may signal that something in the chart doesn't align with your plan. That's a useful emotion. On the other hand, fear that spirals into hesitation or impulsivity is what happens when we let the emotion take over. The difference isn't in the emotion itself, it's in how we relate to it. Dr. Dayton highlights that many of the emotional struggles traders face come from trying to resist emotions instead of working with them. If you try to shut out fear, it just gets louder. If you try to avoid anxiety, it shows up in other forms, like overthinking or self-doubt. But when you acknowledge and accept the emotion, without judgment, it starts to loosen its grip. He uses the concept of mindfulness as a skill that helps traders recognize and relate to their emotions differently. Mindfulness isn't about relaxation or feeling good. It's about awareness. It allows you to observe your emotions as they arise, recognize the stories your mind is telling, and then choose how to respond, rather than reacting on autopilot. Dayton makes it clear. When a trader becomes mindful of their emotional state, they don't suppress it or try to change it. Instead, they notice it, like a wave passing through, and gently bring their attention back to the present moment, to the market, to their plan. This is what builds psychological flexibility, the ability to stay focused and act in line with your goals, even when emotions are present. He explains that even so-called negative emotions like fear or doubt can become allies. Fear might be a sign you're risking too much. Frustration might tell you your expectations are unrealistic. Doubt might be a cue to slow down and reassess. These emotions, when approached with curiosity instead of judgment, can deepen your insight and sharpen your edge. The chapter also touches on how positive emotions play a role in trading. Joy, confidence, excitement, these can enhance performance when grounded in process and discipline. But they can also lead to overconfidence if not balanced by awareness. Just like negative emotions, positive ones need to be noticed and managed, not blindly followed. Dayton reframes the entire emotional landscape of trading. Instead of viewing emotions as the problem, he invites traders to see them as part of the solution. Emotions offer feedback. They show where you're aligned with your values and where you're not. They reveal when you're in sync with your process and when you've drifted. Emotions are necessary. They're not flaws to fix. They're signals to interpret. And the trader who learns to listen to their emotions with awareness and openness is the trader who can perform with clarity, consistency, and resilience. Chapter 5, The Trader's Psychological Edge Lies in a Different Kind of Thinking. Dr. Gary Dayton reveals a breakthrough idea that turns traditional trading psychology on its head. Most traders believe the psychological edge lies in thinking more logically, analyzing better, or becoming mentally tougher. But Dr. Dayton tells us that the real edge, the sustainable edge, lies in a different kind of thinking altogether. He begins by pointing out that traders often rely on cognitive control to try and overcome emotional reactions, using logic to silence fear, discipline to push away doubt, or mental effort to stay calm. But this constant mental effort creates strain. It's exhausting, unreliable, and ultimately unsustainable. It works some days and fails on others. So, what's the alternative? Dayton introduces the idea of observing the mind instead of getting caught up in it. This is the different kind of thinking he's talking about, not in terms of smarter analysis, but in how we relate to our thoughts and emotions. Instead of resisting or identifying with every thought, the trader learns to notice thoughts without being consumed by them. For example, if your mind says, "This trade is going to be a loser," the usual response might be anxiety or hesitation. But in this new mindset, you pause and simply notice there's a thought about losing. That small shift from being inside the thought to observing it creates space. Space leads to choice. You're no longer reacting, you're responding with awareness. Dr. Dayton calls this ability cognitive diffusion, a psychological skill where you separate yourself from your thoughts. You stop treating every mental event as truth. You recognize that your mind is always active, throwing thoughts at you all day long, but not all of those thoughts are useful, true, or relevant in the moment. He explains that our minds evolved to solve problems and avoid danger. That's great for survival, but not great for trading, where uncertainty and risk are part of the game. The mind wants to avoid discomfort, avoid being wrong, avoid loss. But trading demands you accept discomfort, embrace uncertainty, and tolerate loss, because they're built into the process. So when the mind screams, "You can't lose again," or "You should get out now," the trader with psychological edge doesn't obey. Instead, they step back, observe the thought, and check it against reality. What is the market actually doing? What does my plan say? That's the shift from emotional reactivity to mindful response. Dayton also warns against becoming too identified with trading thoughts. When a trader becomes fused with thoughts like, "I'm a loser" after a bad trade, or "I'm invincible" after a winning streak, their identity gets entangled with performance. This creates a dangerous emotional cycle, highs and lows tied to every tick of the market. The real edge, he says, is when the trader can see those thoughts arise and choose not to react blindly. It's not about suppressing thoughts or making them go away. It's about changing your relationship with them. To build this edge, Dayton suggests training the mind through mindfulness practices. Mindfulness teaches the trader how to stay present, to focus on the here and now, not past losses or future outcomes. It builds the skill of awareness without judgment, and it teaches the trader how to return attention to the current moment, the chart in front of them, the plan they committed to, even when the mind is loud and uncomfortable. This kind of thinking isn't passive or soft. It's active mental training. It takes real effort to sit with discomfort, to notice your impulses, and still choose a value-based action. But that's exactly where the edge lies. Dr. Dayton tells us that the best traders don't have fewer thoughts or emotions. They just don't get pushed around by them. They've learned to recognize the noise of the mind, stay connected to their trading plan, and act from awareness rather than emotion. Chapter 6, Practice Mindfulness, Trade Mindfully. Dr. Gary Dayton now invites traders to step into the core of his message. Mindfulness isn't just a concept, it's a skill. And like any skill, it can be trained. He starts by reminding us that every trader faces the same challenge: how to remain consistent, focused, and disciplined in a market that constantly stirs up emotions. You can have a great system, solid knowledge, and a sound strategy, but if you can't manage yourself, your thoughts, your fears, your impulses, all of that crumbles under pressure. That's where mindfulness comes in. Mindfulness, Dayton explains, is not about being calm or stress-free all the time. It's about being present. It's about learning to stay with what's happening right now in the current moment without getting swept away by judgments, fears, or fantasies. He defines mindfulness with 3 key components. 1, present moment awareness. The market only exists in this moment, not yesterday, not tomorrow. Traders often operate from memory or anticipation, reacting to past losses or fearing what might happen next. Mindfulness brings your attention back to the now. You see the current candle, the current price action, the current decision. 2, non-judgmental observation. Traders are harsh self-critics. After a losing trade, the mind says, "You're such an idiot." During a winning streak, it whispers, "You better not mess this up." Mindfulness trains you to notice these mental reactions without buying into them. You observe what's happening inside and out without labeling it as good or bad. 3, acceptance of inner experience. Most traders try to fix emotions. They want to get rid of fear, eliminate hesitation, suppress frustration. But the more you resist, the stronger emotions grow. Mindfulness teaches the opposite. Allow your thoughts and emotions to be there without reacting impulsively. This is acceptance, not giving up, but being open and willing to feel what's real while still acting in line with your trading values. Dayton draws a powerful connection here. The goal of mindfulness is to help you become aware of your internal experience, your thoughts, feelings, body sensations, and still be able to take committed action. You feel fear, but you still follow your plan. You feel hesitation, but you still evaluate the trade objectively. He also makes it clear that mindfulness is not something you just get. It requires practice, like any other performance skill. Athletes train their bodies, musicians train their ears, traders must train their minds. That's why this chapter offers practical ways to begin a mindfulness practice. Formal meditation. Dayton encourages traders to start with just a few minutes a day. Sit quietly, focus on your breath, and every time your mind wanders, which it will, gently bring it back. This simple act of noticing and returning is the core training. Over time, it builds mental strength and focus. Informal practice. Mindfulness doesn't have to be limited to meditation. You can be mindful while walking, eating, or even watching charts. The key is to be fully present, noticing what you're doing, what you're feeling, and what your mind is saying without judging or reacting to it. In-the-moment techniques. During trading, Dayton recommends micro-moments of mindfulness. Take a breath before entering a trade. Check in with your body. Are you tense, rushed, calm? These small pauses create space, and in that space, you get to choose your response rather than react automatically. He also talks about developing awareness of hooks, moments when your mind pulls you out of the present. A sudden price spike, a fear of missing out, anger after a loss. These are hooks. The mindful trader learns to spot them in real time. The moment you recognize a hook, you unhook, not by force, but by awareness. Mindfulness isn't about being perfect. It's about being willing to face your inner experience and stay grounded in what matters. Over time, this builds a trader who is calm, clear, and courageous, even in the face of uncertainty. Chapter 7, Diffusion, an advanced mindfulness skill. Gary Dayton introduces one of the most powerful tools in the mindful trader's toolkit, diffusion. While mindfulness helps us notice our thoughts and emotions, diffusion takes it a step further. It's about unhooking from the internal chatter that often drives impulsive, destructive trading behavior. He begins with a simple truth. The human mind never stops talking. Especially during trading, thoughts race. You'll lose again. You have to make this back. What if this breakout fails? Our natural response is to believe these thoughts. We fuse with them. They become truth, and they control our decisions. But diffusion changes the relationship. Instead of being inside the thought, you step outside it. You learn to see thoughts as what they really are, just words and images passing through your mind, not commands, not truths, not threats. Dr. Dayton explains that fusion is when we become entangled with our thoughts. When your mind says, you're not good enough, and you believe it, that's fusion. You feel the shame, you hesitate, you sabotage yourself. But with diffusion, you recognize, this is just a thought. I don't have to follow it. The real insight here is that it's not the thought itself that causes harm, it's the automatic reaction to it. And this is where traders get trapped. A fear-driven thought leads to hesitation. A hope-fueled thought leads to chasing. A self-critical thought leads to revenge trading. All of it happens because we're fused, because we believe the mind without question. So how do you practice diffusion? Dr. Dayton offers practical techniques to create distance between you and your thoughts. 1. Label the thought. Instead of saying, I'm going to lose, you say, I'm having the thought that I'm going to lose. That small change creates space. It reminds you, this is just mental activity, not reality. 2. Thank your mind. When your mind throws a scary thought at you, try saying, thanks, mind. It sounds odd at first, but it works. It breaks the seriousness, weakens the thought's grip, and reminds you that your mind is doing what minds do, generate stories, warnings, predictions. 3. Sing or repeat the thought silly. Take a self-critical thought and sing it to the tune of a nursery rhyme, or repeat it over and over in a funny voice. This doesn't dismiss the emotion. It just reveals the thought's lack of power when stripped of seriousness. 4. Write it down, then let it go. Writing a troubling thought and then physically setting it aside, tearing it up, putting it in a drawer, is a symbolic act of diffusion. It helps create emotional distance. Dr. Dayton emphasizes that diffusion is not about getting rid of thoughts. That's key. The goal isn't to suppress or delete negative thinking. The goal is to see it, recognize it, and then choose whether to act on it or not. That's mental freedom. He also brings in neuroscience to support this idea. Studies show that when we observe a thought mindfully, the emotional intensity linked to it actually decreases. Brain scans prove this. It's not just feel-good psychology. It's functional biology. Critical moment in every trader's journey, the internal war. You want to follow your plan, but your mind screams, don't do it. Diffusion is how you stay centered in that storm. It allows you to feel the fear, hear the noise, and still act in line with your values. This leads to a deeper kind of confidence, not based on winning trades, but on knowing that you can handle your inner experience. You can stay focused, even when emotions surge. You can act wisely, even when your mind pulls you in another direction. That's the mark of a mentally skilled trader. Dayton ends the chapter by reminding us that diffusion, like any skill, takes practice. But each time you unhook from a thought, no matter how small, you strengthen your psychological edge. You become less reactive, more present, and more consistent. Over time, this becomes second nature. And that's what the best traders have. Not perfect thoughts, but the power to choose which thoughts to follow and which ones to gently let go. Chapter 8. Acceptance and Committed Trading. Dr. Gary Dayton introduces two of the most misunderstood, yet deeply transformative skills in trading psychology: acceptance and committed action. He begins with a common trap many traders fall into. We assume that to trade well, we must first eliminate our fears, doubts, or frustration. We think success comes from fixing our emotional life. But Dr. Dayton challenges this. He says, it's not about eliminating discomfort. It's about learning to act effectively with it. This is where acceptance comes in. Acceptance doesn't mean giving up or tolerating poor behavior. It means making space for difficult thoughts and feelings without letting them dictate your actions. When fear, anxiety, or self-doubt arise, as they always do in trading, the goal is to acknowledge them, feel them, and still move forward in line with your trading plan. Dr. Dayton draws a clear distinction between pain and suffering. Pain is inevitable in trading: losses, drawdowns, tough decisions. But suffering is what happens when we resist that pain, when we fight our emotions, try to suppress them, or act impulsively just to avoid feeling discomfort. Acceptance helps us reduce this suffering by meeting our inner experience with openness instead of struggle. He offers this image. Emotions are like waves in the ocean. You can't stop the waves, but you can learn to surf them. So, how does this apply to trading? Imagine you've taken a string of losses. Your mind says, "You're failing. You shouldn't trade today." Anxiety rises in your chest. The urge to avoid the screen builds. In that moment, most traders either act on the fear and skip the next valid trade or fight it, trying to force confidence. But a trader practicing acceptance pauses and says, "There's fear here. That's okay. I don't like it, but I don't need to get rid of it. I can still follow my plan." This is where real mental strength shows up. Committed action means behaving in ways that reflect your deepest values as a trader, no matter what thoughts or emotions are present. Dr. Dayton encourages traders to define what matters to them. Is it discipline, integrity, mastery, resilience? These values become your anchor. When your emotions surge and the noise in your head gets loud, you return to those values, not because you feel good, but because you've made a commitment. He reminds us, trading is not a feel-good game. There will be fear, there will be doubt. But traders with a strong mindset don't wait to feel ready. They act in alignment with their plan and values, again and again. Dayton makes it clear that you don't need to be fearless. You don't need to be perfectly confident. You just need to be willing to feel discomfort and still take the right action. To support this, he introduces the idea of psychological flexibility, the ability to stay open to your inner experience and still choose meaningful action. This, he says, is the foundation of all high-level performance. The best traders in the world still feel pressure, but they don't let it stop them. They act with the pressure, not against it. Dr. Dayton offers simple but powerful tools to practice acceptance. Observe your discomfort with curiosity instead of judgment. Name what you're feeling. This is fear. This is frustration. Breathe into the sensation, letting it be there, not running from it. Then ask yourself, what action would the trader I want to be take right now? That's the heart of committed trading. It's value-driven, not emotion-driven. It's showing up with courage, not waiting for confidence. And over time, this builds a trader who is stable, focused, and resilient, no matter what the market throws their way. Dr. Dayton closes the chapter with a message of hope. Acceptance and committed action are learnable. They're not abstract ideals. They are skills you can build, step by step, trade by trade, until your trading behavior reflects the kind of trader you've always wanted to be. Chapter 9, The Trading Psychology Process, High-Quality Preparation. Dr. Gary Dayton begins to lay the groundwork for something crucial, a structured psychological process that supports consistent, high-level trading performance. And it all starts before the market even opens, with high-quality preparation. He makes a critical point early on. Most traders focus almost exclusively on technicals, charts, indicators, setups. And while those things are important, they often neglect something even more powerful, their mental readiness. Dr. Dayton emphasizes how you prepare mentally has a huge impact on how you perform. He introduces us to the idea that trading, like any performance endeavor, sports, music, public speaking, demands not only strategy and skill, but also mental clarity, emotional balance, and focused intention. And none of those just show up on their own. They are cultivated through deliberate preparation. So, what does high-quality psychological preparation look like? 1. Reflect on your recent performance. Dr. Dayton starts with a reflection practice. Before jumping into the market, pause and review your recent trades, especially the previous day. Not just to see what you did right or wrong technically, but to explore how you managed your mindset. Did you follow your plan? Did emotions interfere? Were there moments where you felt reactive, rushed, or hesitant? Did you act in line with your trading values? This kind of reflection isn't about criticizing yourself. It's about learning. It builds self-awareness, and that's your strongest tool in mastering the mental game. 2. Set a psychological intention for the day. Next, he guides us to set a clear, focused intention for the day. Not just what trades you want to find, but how you want to show up mentally. This could be, today, I will stay present and patient. I will acknowledge my emotions without letting them control me. I will trade my plan, regardless of outcome. This intention becomes a psychological compass. It gives your brain direction. It reminds you of who you're committed to being, even when things get tough. 3. Use visualization to strengthen mental readiness. Dr. Dayton introduces a powerful tool used by top performers in every field: mental rehearsal. He suggests that before trading, take a few minutes to close your eyes and visualize yourself. Sitting at your trading desk, calm and focused. Seeing a setup develop, feeling the pull of fear or greed, but noticing it with clarity. Making the right decision, aligned with your plan and your values. Why is this so effective? Because the brain doesn't fully distinguish between imagined and real experience. When you visualize yourself trading mindfully and skillfully, you're literally training your brain to act that way when the time comes. 4. Ground yourself through breathing and presence. He also emphasizes grounding exercises, short breathing practices to center yourself before the market opens. Just a few slow, deep breaths can lower anxiety, sharpen focus, and bring you back into the now. This kind of present moment awareness helps you begin the trading day anchored instead of scattered or reactive. 5. Review your trading plan and core rules. Of course, mental readiness doesn't replace your strategy. Dayton advises reviewing your actual trading plan, setups, risk management rules, trade management steps. But he encourages doing it mindfully, not rushing through it, but reconnecting with it as a structure that supports your discipline. Reminding yourself, this is what guides me. This is what I will follow, no matter what the market throws at me today. 6. Acknowledge what you can and can't control. Another powerful mindset shift in this chapter. Before the day begins, acknowledge that you cannot control the market. You can't control how trades play out, or whether your setup hits profit or stop loss. But you can control how you respond to discomfort, whether you follow your rules, whether you stay true to your values as a trader. Preparing with this in mind creates psychological flexibility. You become less attached to outcomes and more anchored in your process. Daily preparation as a ritual, not a checklist. Dr. Dayton encourages making this preparation process a ritual, not just another task, but something meaningful, something you look forward to. A space where you reconnect with your purpose, your growth, and your identity as a trader. He explains that the traders who thrive long-term are the ones who prepare both technically and psychologically, who enter the trading day not just armed with charts, but with clarity, intention, and presence. Dayton gives us a blueprint to do just that. By making high-quality psychological preparation part of your daily routine, you give yourself the best possible chance to trade not just well, but mindfully and with integrity. Chapter 10, The Trading Psychology Process. Effective execution. Execution. It's the moment where everything you've prepared for is tested. Your trading plan, your mindset, your discipline. And in this chapter, Dr. Gary Dayton breaks down what truly effective execution looks like in a mindful trader's world. He begins by explaining something many traders overlook. Execution is not just about placing orders. It's about taking deliberate, values-driven action in real time, in the face of emotional intensity. And this is exactly where most traders struggle. You might know your setup, see the market lining up, and even feel the impulse to act. But then, hesitation creeps in. Doubt surfaces. What if I'm wrong? Fear whispers. And suddenly, the opportunity slips away. Why? Because we let our internal experience dictate our behavior. Dr. Dayton teaches that effective execution is all about acting in alignment with your plan and values, not your moment-to-moment emotions. Mindfulness in the heat of the moment. He reminds us, the market is a highly emotional environment. As prices move, your thoughts and feelings surge. You can't stop that. But through mindfulness, you can stay aware of those reactions without becoming entangled in them. Dayton emphasizes this subtle but critical shift. Instead of, I feel nervous, so I won't take the trade, you say, I notice nervousness, and I'm still taking the trade because it meets my plan. That's a huge leap in psychological maturity. It's acting in the presence of discomfort, not in its absence. Observe, feel, act. Don't react. Throughout this chapter, Dr. Dayton trains us to step into a sequence that builds consistency. 1. Observe your internal state, thoughts, emotions, physical sensations. 2. Feel them, fully, openly, without resistance. 3. Act in line with your plan and trading values. 4. Don't react to the noise, whether it comes from within or from the market. When you notice fear, acknowledge it. There's fear here. When a thought says, skip this one, pause and check. Is this my trading plan speaking, or my mind trying to protect me? This level of self-awareness gives you the space to choose, and choice is where your power lies. Values-driven execution. Dr. Dayton reinforces that good execution is not about feeling confident. It's about being committed to the trader you want to be. If your value is discipline, then good execution means following your rules even when you're uncertain. If your value is courage, it means entering a trade despite fear, because the setup is valid. If your value is patience, it means not forcing trades just to feel busy or in control. By connecting execution to your values, you give it meaning, and that meaning keeps you grounded when your emotions rise. Handling mistakes with awareness. No trader executes perfectly all the time. You will miss trades. You will act impulsively sometimes. The key is to notice it without judgment. Dr. Dayton encourages traders to see mistakes as learning moments, not failures. Let's say you chase a trade and it reverses. Instead of beating yourself up, you pause and ask, what triggered that decision? Was I fused with a thought? Was I avoiding an uncomfortable emotion? That kind of reflection builds psychological flexibility, the capacity to improve without spiraling into shame or self-doubt. The execution journal. One of the most practical tools in this chapter is the execution journal, a companion to your regular trading journal. Here, you don't just log entries and exits. You track what you were thinking and feeling before and during the trade, whether you executed according to plan or acted from emotion, what internal challenges came up, fear, urgency, boredom, how you responded to those challenges. Over time, this journal becomes a mirror. It shows you your mental patterns and helps you refine your execution behavior from the inside out. Presence, not prediction. A recurring theme in this chapter is staying present. Dayton warns against future tripping, getting caught in imagined outcomes. What if I lose? What if this trade is the one that ruins my week? This kind of thinking pulls you out of the now and into fear-driven behavior. Effective execution happens in the present, grounded in your plan, your process, and your values, not in some imagined future you can't control. When you combine mindfulness with preparation and values-driven action, you become consistent, not because the market gives you wins, but because you become reliable in how you act. That's what separates amateurs from professionals. That's the foundation of real trading excellence. Chapter 11, The Trading Psychology Process, Constructive Self-Assessment. Gary Dayton brings us to the final, but equally critical stage of the trading psychology process, constructive self-assessment. This isn't just about looking at wins or losses. It's about evaluating how we traded from a psychological perspective, with honesty, kindness, and a genuine desire to grow. Dayton emphasizes something most traders overlook. Self-assessment is not about judgment. It's about learning. It's about developing psychological awareness and using that insight to refine both our strategy and our mindset. Why self-assessment matters. Most traders rush through their day, maybe glancing at their profit and loss, then moving on. But Dr. Dayton warns us, if you don't look at how you performed internally, mentally, and emotionally, you miss the root cause of most trading struggles. P&L tells you what happened. Self-assessment tells you why it happened. What to assess after every trading day. Dr. Dayton offers a structure for reviewing your trading performance, not just technically, but psychologically. Ask yourself, did I follow my trading plan? Did you stick to your rules, or did emotions push you off track? What thoughts or feelings showed up? Were you nervous, fearful, excited, overconfident? What triggered those feelings? How did I respond to those emotions? Did you act on them, resist them, hack, or mindfully notice them and move forward? Was I present and focused throughout the day? Or did your mind wander into the past or future, second guessing or hoping? Did I act in alignment with my trading values? Were you disciplined, courageous, patient, resilient? This process brings clarity. You begin to see patterns. Maybe you notice that fear shows up right before entries, or that frustration creeps in after one loss, affecting the next trade. This insight becomes gold. It gives you the chance to respond better next time. Self-assessment without self-criticism. Here's where Dayton gives perhaps his most powerful lesson. Be kind to yourself. Too many traders use self-assessment as a way to beat themselves up, but that only adds more emotional baggage to the next trading day. True growth happens when you can look at your behavior honestly without judgment. If you hesitated on a trade, don't say, "I'm weak." Instead, say, "I noticed fear today. I see how it affected me. Next time, I'll use my breath to ground myself and take the trade if it meets my criteria." That's how professionals think. They evaluate without blame. They grow without shame. The learning mindset. Dr. Dayton encourages traders to embrace a learning mindset, where every day in the market is an opportunity to learn more about the market structure, your trading strategy, and most importantly, yourself. This mindset is humble. It's curious. It understands that mistakes are not failures. They are feedback. Journaling as a tool for self-assessment. He recommends keeping a psychological trading journal alongside your trade logs. This is where you write not just what happened in a trade, but what you were feeling, what thoughts were dominating your mind, how you responded internally, whether you stayed present and mindful. Over time, this becomes a mirror. It shows you who you are in the heat of the moment and how far you've come. This journal is not a diary of wins and losses. It's a record of your evolution as a trader. Celebrate wins, especially the psychological ones. Dayton reminds us to celebrate not just when you make money, but when you execute mindfully, stay present, or act in line with your values. Maybe you took a loss, but you stuck to your plan. That is a win. Maybe you noticed fear and still entered the trade. That is a huge win. This reinforces the behavior you want to build. It gives you confidence that's rooted in your process, not just in short-term outcomes. Chapter 12, Final Thoughts. This final chapter isn't about giving new tools or techniques. Instead, it's a call to remember, a reminder of what really matters in trading. And most of all, it's an encouragement that the inner path is just as vital as the technical one, maybe even more so. Trading is a mental game and a growth journey. Dr. Dayton begins by reaffirming a truth every trader comes to learn eventually. Trading is a deeply mental and emotional pursuit. Your thoughts, feelings, and reactions are involved in every trade you take or avoid. He reminds us that this doesn't mean emotions are bad or something to suppress. Instead, emotions are part of trading, and learning how to work with them instead of fighting them is what leads to mastery. He encourages traders to stop seeking quick fixes, to stop chasing magic indicators or perfect setups. True consistency comes when you develop the internal skills to stay focused, present, and values-driven, no matter what the market throws at you. The role of mindfulness. One of the central messages throughout the book has been the power of mindfulness, not just as a buzzword, but as a practice. Dr. Dayton urges us to continue this practice even beyond the book. Be aware of your thoughts without automatically believing them. Be willing to feel emotions, even the uncomfortable ones. Stay grounded in the present moment, because that's where trades are managed, and that's where your power lies. Mindfulness, he says, helps us develop the psychological flexibility we need to act effectively in uncertain conditions, which is the very nature of trading. The process over the outcome. In these final thoughts, Dr. Dayton reminds us, focus on the process, not the outcome. Trading results will always vary. You'll have winners and losers. That's normal. What matters more is, are you trading with discipline? Are you staying true to your plan? Are you acting in line with your values, not your fears? When you shift your focus from outcome to process, you become more stable, more consistent. And eventually, that's what leads to success. From struggling to growing trader. He acknowledges that many traders feel stuck or discouraged at times, but he offers hope. You don't have to be a natural to succeed. You just have to be willing to grow. The mindful trading path isn't flashy, it's quiet, it's internal, but it's powerful. And over time, it transforms you, not just as a trader, but as a person. You learn patience, awareness, emotional strength, and you begin to trade from a place of clarity, not chaos. A lifelong journey. Dr. Dayton closes by reminding us, this is a journey. You won't master your mind in a week or even a month, but if you stick with it, if you build the habits of preparation, presence, execution, and reflection, you'll start to see profound change. Not just in your trading account, but in how you handle stress, how you make decisions, how you relate to yourself. Mindfulness isn't just for trading, it's for life. And if you walk this path with intention, it can lead to success that's both financial and personal. Final words. The trader's greatest edge lies in a mind that is calm, focused, aware, and values-driven. This is the path of mindful trading, and it's available to you right now. That's it for today's chapter, friends. I hope you found it valuable and it gave you some real insights you can apply in your trading journey. If you're enjoying this series and learning something new, don't forget to like the video, share it with your fellow traders, and subscribe to the channel for more powerful content like this. Thanks for being here. I'll see you in the next one. Until then, trade smart, trade mindfully.